Lovely to see you all again. So this time for the second breakout session, it's talking about the new and revised auditing standards, so all around the CAM reporting. We have 4 questions here. We will also get a chance to talk about going concern in a little more detail as well. We have slightly less time this time, but one less question, so let's see how we go. We might as well start with the first question and see how we go. So any comments people might have on whether the information in that new auditor's report, and I say new, it's been around for a few years depending on the jurisdiction you're in, and there's some jurisdictions that still have to implement it, but any comments people have, and has it increased confidence in the quality of the audits being performed in your jurisdiction and based on your observations? And I know we have a number of audit committee members and chairs of audit committees as well, so hopefully they have some good observations that they can share as well. Suresh, first hand up. I like the person who put their hand up first. Thank you.
Yeah, that's fine. I suppose just from a communication point of view and having a discussion on some of the key issues that auditors came across, I think it's been very good. Particularly, areas such as, particularly the judgment areas and judgmental areas and estimation areas. A lot of dialogue has come through. I think I've been on audit committees now for 5 or 7 years. I must say that is an area where I've seen a huge kind of increase in discussion, which I think it should be, because it's a judgment area, and a lot of estimation goes into some of these areas, particularly when you're looking at areas like goodwill, revenue recognition. So I think that's a good dialogue. So overall, I would say, I like the CAMS idea, and I think it has enhanced communication between the auditor and the audit committee, and in fact, even to the board.
Thanks, Suresh. Anyone else? Maggie.
Just following up on Suresh, I think it has been a very positive development. We did a review looking at implementation globally, and increased transparency, increased engagement, but we did find the link directly through to actually enhancements in audit quality and in the quality of discussions between the auditors and management taking place. Now, I think there's sort of still room for development and improvement there. We had in the questions there about actually the engagement with that the shareholder themselves in terms of audit, and certainly that's a theme coming through in the Bryden report. But I think it's been a really positive development, and I think it's that pull in terms of keeping it live, so as it doesn't become boilerplate but longer, is actually the demands from shareholders themselves in terms of what they want from it, how they use it. So, a very, very positive development, I think.
Okay, I don't think maybe we're not going to get a dissenting view, but if there is one, I'd be happy to hear it. But if there's no dissenting view, we can move on to the next question, which is around whether or not the information that is being reported in the CAMS is meeting your expectations, and what might be done to improve the usefulness of the information in the CAMS. And I know that there's some firms and some jurisdictions that have additional requirements around certain things that maybe either go into the CAMS or certainly go into the broader audit report. So the concept of materiality and the scoping of audits, for example, and the threshold for audit errors is something in the UK, for example, which they have. And then there's a firm in particular, one of the larger firms, that goes an extra step and talks about not just why it was a CAM and what they did in response to that CAM, but whether or not there were any findings, for example, which I know has created reasonably robust internal consternation at firms as to, well, do we want to go that extra step? But I'd be interested to get people's reactions around whether or not we think there's something else we should be doing. Should we be going further? Is it meeting your needs? Annette?
Just to reiterate what's just been said, there's quite some research out there, empirical research, experimental research, and how CAM are perceived. And coming back to the first question, there's clear evidence that confidence in the quality of the audit performance can be increased by the reporting of CAM. But what is key is in the CAM is how the wording is set. Is it done in a sort of a easing, smoothing, confirming way, or is it rather critical? And the research I did with my team was the more critical it is, the higher the value, the perceived value of the CAM and that communication is. And that is quite interesting because it reflects on the expected role, and this is the link to question 2, on the expected role of the auditor. Is the auditor expected to really challenge management and also challenge accounting practices and challenge what is in the financial statements, or is it rather a confirmation? It nicely relates back to what you've just mentioned, Fiona, with regard to, ISO 315, whether you take that sort of challenging or professional skeptical attitude or not. And the more, the auditor conveys its skeptical attitude, the more value that CAM actually, conveys. What I find personally is really helpful is read something about the observations. I wouldn't call it finding, because we all know, it's we don't want these piecemeal opinions. But nonetheless, observations, from audit procedures do, of course, add value to that part of communication. It's not only the reason why an issue or topic was chosen as a CAM and what the auditor did, but also what the results, of the audit procedures were. I think that sort of comes naturally, with the whole way the CAMs are set up, and I still find it quite, weird to read through CAMs with, not having observations from these audit procedures included. I know there's differences between audit firms, which is fair enough because it's the way the standard is written, but I think the part of the value, the communicative value, is in the description of these observations and how they are described, as I said before. So, and there's interesting research out there. I'm sure that Duff in the other breakout session will sort of, relate back to that.
Thanks, Annette. Anyone else? Oh, we're going to whiz through the questions. We'll be done and have a longer break. No, I'm kidding. I'm going to make you work hard. Don't worry. Maggie, do you want to comment on this one before we move on to question?
Just before we come on, I thought it would be helpful just to pick up, because Bryden was mentioned in the Q&A in the open session, and that's certainly an area Bryden goes into in terms of the sort of gradated findings. So picking up, as you said, about the firm that has sort of led the way in this, and to be fair, it hasn't, we haven't seen the momentum, so that came through very early on in the development. I think there was hope at that stage that you'd see year-on-year development and evolution. That's not been seen, but certainly Bryden was very supportive of the gradated findings approach, whilst retaining the binary opinion, the gradated findings, and actually, interestingly, in comparison to some of the other recommendations, not supportive of a large framework to support that, but rather letting the demands sort of start to develop the gradated findings and how that was presented. So I think trying to caution against that sort of potential retreat behind sort of boilerplating or the criticism of boilerplating.
Have you seen, just out of curiosity, Maggie, because I haven't looked at a lot of opinions recently in the UK, but I know one of the comments initially, the first few years of implementation, was very creative ways of describing why something was a CAM, and then very creative ways trying to describe in simple language what had been done in response to those CAMs in terms of audit procedures. Has that continued to evolve, or has it started to pare back a little bit and become a little more, I guess, boilerplate? I hate that term, but you know what I mean.
Yeah, I hate the term boilerplate. And to be honest, we did research looking at the FRC did some amazing research looking at the first 2 years. We did a piece of research looking at year 3. We haven't delved in that level of detail. We're certainly seeing the momentum in terms of that evolution slow down, which I think is probably disappointing. But we're not seeing that move to boilerplate itself. So I think actually in terms of what's expected and what's demanded from the descriptions, probably in a more positive direction. But I don't have the sort of strong sort of evidence base that I would have had for year 3 to rely on for that.
Yeah. Okay. Thank you. Zaiton, I see your hand is up as well.
Yes, thank you. I love CAMS too. If I could make a suggestion to make it better, is to have a more wholesome reporting on what is also being done from a risk management perspective, not just in terms of financial management, so that readers of the report can get a more comprehensive view of how the company is handling this risk. So that sort of adds a little bit more information and gives a more comprehensive understanding of how these matters are being dealt with, not just from a financial treatment, but also from a risk management perspective.
And would you see that, Zaiton, being similar to, I think, again, what the UK have in their model, where I think it's the Audit and Risk Committee, correct me if I'm wrong because I'm not from the UK, but I think that the chair of the Audit Committee has a report in the financial statements which talks very broadly, from my understanding, around risk management and what the key risks are and what processes they've put in place to respond to those risks. Is that the sort of thing you were thinking, or were you expecting in the auditor's report?
In the auditor's report.
Okay.
Because if you're auditing a company, it's not just about financials. You need to take a broader look. In terms of whether it comes under the remit of the audit committee, it depends on companies. Some combine it, and some have very distinct audit and risk committee, but more often than not, they are common members. So we do talk to each other in terms of what's happening in the audit and the risk committee.
Okay. As an audit partner, I'm frantically trying to work out how I would do that, but anyway, Annette's going to give me lots of extra audit fees, so I'm sure we'll be fine. We'll be able to get there. So if we move on to question 8, and this is where we really get into going concern, and interested in people's feedback and reactions to how going concern is dealt with at the moment, which is part A. So it is it's obviously described in the auditor's report, obviously our responsibilities and management's responsibilities, and whether or not that's helpful, first of all, and having it in a separate section with a separate heading, giving it prominence when there's a material uncertainty. Is that working for people? And then depending on your answers to that, whether or not there's anything else in terms of additional information that might be helpful, particularly around going concern. And given some of the challenges that I know are in Germany and South Africa reasonably recently around some going concern challenges for some entities, I'm sure Annette and Suresh, you probably have some war stories of, what might we be able to do differently to try and enhance that? Or maybe not, maybe there's nothing, maybe it was a self-fulfilling prophecy, I'm not sure.
Yeah, I'm actually afraid it was. Going concern really is a difficult issue. It's much more difficult, I think, than fraud, conceptually, for the reasons we've already discussed. And apparently this was also sort of the view in other groups. So the problem with that sort of description of roles and responsibilities is sometimes it's quite unclear what the meaning is. Yeah, I mean, what I do with this information. I mean, it's obviously quite clear, and there is an inherent limitation about the future that we have, sometimes very little knowledge about, how things will evolve. Look at the COVID crisis. It's really difficult to find out, who is sort of hit in what way and what the interdependencies, when it comes to industries, for example, what they are. So I'm a bit, I don't know. It's really difficult, and I'm not quite sure what we could do better in this way. Where we could even, be better in describing what the auditor does and what management's responsibilities is. I think Jim made a great point. Part of the responsibility is with the accounting standard setters, to really challenge the preparer to be even more explicit about risks and the description of risks in the financial statements, because I think, to be honest, the auditors can only, audit the financial statements. If there is nothing in the financial statement that is, by nature within the scope of the audit, it's difficult for the auditor to come up with a statement or with a statement or a conclusion, whether, what's in the financial statements is appropriate. So I mean, we've had the discussion when we discussed ISO 540, you know, what's the role of the accounting standing setter there? And I think there's a clear role in, for example, for example, for the IAASB here. So it's difficult, you know, to add something, you know, to ISO 540 or to what? No, it's not 540. Help me. It's whatever. You know, it's difficult to add something to the ISOs, let's put it that way, that without challenging, you know, the accounting standard setter. I think that was Jim's point. He related back to the 12 months. I think there's much more than only the 12 months issue. But of course, you know, the accounting standard setter struggles with the self-fulfilling prophecy as well. So that's a difficult topic. I think
but maybe this is how we connect it.
Than fraud conception.
Yeah, and maybe we connect it to Zaiton, your suggestion, where if the accounting standard setters are more prescriptive in covering off, you know, not just the period for going concern, but also a requirement around explaining the risks in a different way in the financial statements, as opposed to a separate audit committee report, for example, which is where the UK model is. And that would force the auditors to have to audit those disclosures and potentially comment on them in terms of CAM. So that might be the link between your challenge, Annette, and your suggestion for improvements. I just wasn't smart enough to join those two until Annette described it in the way she did, so that I could join the dots. I'm a bit slow. You probably got there hours ago, Zaiton, because you're
much
smarter.
More elegant. You're much more elegant than I am, Fiona. You always used to be.
I don't know about that, but I think maybe that's a way that you could, help solve it. Is they're one of the bodies in the ecosystem that we often talk about, and they do have a really big role to play. And we all know they have a standard on materiality, they have a standard on going concern. I mean, they're things that cut across what we also do as auditors. So I think it's a perfect opportunity to be talking about those topics with them as well.
Yep.
Suresh, not to put you on the spot, but any comments from you as well? I know you've seen a number of going concern challenges in South Africa, and you underplayed your role when you described your ex-PwC and ex-IAASB. I suspect one of the things that you're probably focusing a lot of time on at the moment, being chairman of the King Committee as well as being chairman of integrated reporting, is thinking about some of these other things that should be included in financial reports and how might they be feeding into that going concern challenge. And I think you're on mute still. Here we go.
Okay, so I think Annette summarizes pretty well that, I think I wouldn't think that there's more needed on the disclosure side from auditors. I think that is well defined between the two parties. What's management's responsibility, what's the auditor responsibility, and also when there's a material uncertainty, how that's escalated. I think the challenge here is it's a performance issue in the robustness with which auditors do work in this space. And it's not an easy area because, it's the crystal ball gazing, right? And maybe this is another one of those that, one of the things I think, even though we say that it's the accounting standard setters, I don't think it would be inappropriate for auditors to say in their country, whichever country it is, that this is the period that they're looking at. Whether it's 12 months from the balance sheet, 12 months from the date of the financial statements, of the director's report or whatever. But I think, and it may be more something that just like, on financial instruments, we often give sensitivity analysis, maybe something more on the management side needs to be put in. I don't think this is an auditor issue because I think the rules on the auditor side are good. I think it's just performance on that side that if we could kind of get better at, it would be okay. And I've been kind of maybe a bit fortunate that, I haven't had companies that had to deal with big, huge going concern issues. But at the same time, with COVID, everybody's got to question everything. That's just the reality. And, what pops up in 12 months from now or 18 months from now, one doesn't know. So it's just the nature of what we're dealing with. It's crystal ball grazing and saying, this is likely to happen. And it happens and uncertainty impacts every organization differently. So it's not as if you can come with more rules on this or more reporting on this. how robust can the auditor be in this space, and how robust is management in this place, and how robust is the audit committee in this space. So I think it's again, everybody's got to play a very robust role in this area, because when you have going concern issues, I mean, then if you really do have going concern issues in addition to the auditor reporting, I mean, it's going to become a CAM anyway. There will be something that will be there. So overall, I don't think there's too much more other than saying in every territory that you could say what is the term that you're looking at.
Yeah.
Even though it's not an accounting, there's no clarity on the accounting side, but at least from the auditor can say, I've looked at 12 months ahead, or I've looked at this date. Maybe that may be a clarification that may be useful.
Yeah, I'm fortunate to be in a part of the world where our year end was 30 June, so we will be watching 31 December year ends with interest to see how the impact of COVID is really understood and assessed when it comes to going concern. It straddles a very different period for us, given the first 7 or 8 months of a financial year was reasonably strong for most businesses, and it was really the tail end which there was so much uncertainty. But having said that, even companies that benefited from COVID, and I audited a large supermarket group where they couldn't sell enough toilet paper if they tried. There was so many runs on the stock shelves, but the cost of COVID, of running their business and having to ramp up their supply chain and everything else, it created a number of really interesting conversations, not so much around going concern necessarily in the short term, but I suspect if it was a 31 December conversation and that had another 6 or 7 months later of extraordinary costs for running that business, the increased revenue does not drop to the bottom line, that is for sure. So even companies benefiting don't necessarily get to escape that going concern conversation. And I know certainly there's an expectation at the AGM there'll be a lot of questions of particularly the 2 large supermarkets in this country around those extra costs, but really understanding the risks that have been created in the business for having all those extra costs. So it goes to the conversation we've been having already around, it's not just about going concern, it's about what are the risks to that business model now that we never considered earlier because we'd never had to deal with a pandemic, and how does that get described adequately to the shareholders. And at the moment, there's no real avenue inside the audited financial report really to talk about that to any great extent. There's much more avenue in the OFR and the MD&A and other parts of the report that most jurisdictions have some kind of expectation around risks and how they're described. So maybe coming out of this, we'll get enhanced requirements in jurisdictions around talking about the risks of these sorts of things. It's going to be interesting.
Just to add on that, you mentioned the integrated reporting. In South Africa, companies prepare integrated reports, and there's a lot more disclosure by management on uncertainties that the business faces, that the organization faces, than what they could put in the auditors, because it's not audited. So, I need to put that in. But once there's an audit label to it, I mean, it's just a very different game after that. I mean, you've got everybody considering risk and everything else. Yeah.
Well, and it's going to be interesting to see. I mean, climate change and the risks coming out of climate is, it's been a topic of conversation for a while, but it seems to be ramping up recently. I know New Zealand is just in the process of legislating. They've certainly announced that it will be a legislative requirement to report those and include them in your financial report for the first time, I think, in another year or so. At this stage, no assurance, but I can guarantee you someone in government will decide that's a good idea before too long, and that will absolutely raise the bar around the commentary around climate risks. And I know this, the UK, Australia, Canada, there's lots of countries that are really focused on that as a concept that really needs to be considered when you think about financial reporting risk as well. How do you take climate change into account when you're doing future forecasts and cash flow forecasts and models around your impairment models and property valuation? So I think there's this broader concept of risk, back to Zaiton's comment, it's absolutely going to play a bigger part, I think. That's just my personal view on the reporting as we move forward. We have one other question. So just whether there was anything else, any additional information that people think should be communicated in the auditor report to further enhance the understanding of it, of what was happening from an audit perspective. And Saiton obviously had a very good suggestion around, you know, thinking about that risk management and how that's addressed, and maybe auditors could be doing procedures around that. Is there anything else people think should be included? Oh, we got the perfect audit report, Bev. It's nothing. That can't be right. Maggie.
Sorry, I think some of the elements, not that I think you can make it longer and longer, it just becomes unusable, to be honest. You sort of can't see the wood for the trees. So I think we've got to guard against that sort of, let's add in more and more and more. I think it's actually, how do you make that document more accessible to the reader? And actually they are quite impenetrable at times when you're picking them up and reading them, going through the elements that are boilerplate versus the elements that are bespoke. So I'm not entirely sure it's about additional content. So I do agree on the risk point that Saiton raised, but I think it's also about how we make the content that's there as engaging as possible. And then I think some of it, you know, if I think from a UK context, some of it will depend on where Bryden recommendations end up. You know, we've already had in the previous sort of open floor about the resilience statement, which kind of does link into the going concern element, and where audit is positioned against that. And certainly I you know, from the resilience statement linking back to a previous conversation, that really does put the onus not on audit but on the preparers, which I think is absolutely critical in this area in terms of what they've considered, how they've considered it, not just for the 1 year, but it's putting it into 2, and then the midterm 2 to 5 before going into the longer term. And I think in some ways that lowers the bar for the directors of companies to actually be communicating much more clearly in their reports to their stakeholders. So yeah. Sorry, that was a rather long question to say. I can't think of anything specific, but we do need, other than risk, but we do need to make it as engaging as possible, or we run a danger of it doesn't achieve what it sets out to.
Yeah, and we've started to see some auditors putting pictures in their audit reports and graphics and things, which I don't know if that makes it more engaging, but I know there's certainly readers who find graphics and pictures easier to understand. So, Annette?
It's great to have Maggie in our group. May I ask a question? What's the experience related to the disclosure of materiality thresholds? Because from my understanding, but this is something that is rather specific to the UK. In the countries, that's rather unusual. So I remember the discussion about, you know, the sort of the mandatory disclosure of materiality thresholds in the auditor's report very well when I used to be a member of the IAASB, and I was just wondering what the experience is, because I could imagine that this topic is, you know, popping up in other groups, or, you know, it's going to be brought up from other stakeholder groups. So how is that information, you know, not only perceived, but, you know, how is it sort of transformed into action, you know, from a capital market perspective, for example?
Yeah, so it has been, that's been an element. Our understanding and our feedback has been very positively received. I think it's led to some very good discussions in audit committee and in understanding the nature of it. Led to some good challenge is the feedback we're getting. And from investors, they have been very positive about this development. Now, I think it can lead to a bit of, whether it works for the wider stakeholder beyond that in terms of understanding, I don't think we're anywhere there, but actually the response, my understanding from the conversations we've had has been very, very positive, not just in terms of comparability and looking at it, because that it never gives you the comparability that people potentially think it does, but in terms of having a more nuanced conversation between audit and those charged with governance, between the shareholders, I think we're certainly seeing that development.
Okay, but do you, for example, observe a change in the materiality thresholds over time? Because that would sort of be a reaction to that information, right? For example, further decrease or even increase, you never know, but probably a decrease in materiality thresholds.
No, we haven't seen that in terms of coming through, in terms of a response from the firms to reduce. You probably do see that it's holding levels. I think it would be harder reputationally to increase. Where you do see the best indication is actually in the transfer from when you've got the retender exercise and comparing like with that year on year. I think that's a really interesting one.
Is it something in Germany, Annette, that has been discussed or debated? It was just a note.
No, nothing. No.
Mm.
No, there seems to be some reluctance to disclose the thresholds. But you know, in Germany, we have a long form audit report as well. And this is where the materiality thresholds have to be disclosed. So
Right.
by we do have a discussion of materiality thresholds with the audit committee. So I think it's probably a bit different from other, you know, jurisdictions. So because I mean, I'm with Maggie, it does make sense to have the discussion, right? And I couldn't really imagine a setting where we do not have this discussion. The problem, the question is whether it's, you know, helpful or useful to disclose, you know, the figure, the information in the auditor's report. So it's sort of communicated to the public. I think there has to be a discussion with the audit committee. That's for sure. Mm-hmm. Yeah.
And I think most jurisdictions, if it's not a legal requirement, certainly I think most firms have it as a requirement minimum for listed entities. You would be required to communicate materiality and have that conversation with the audit committee, and including, you know, the error threshold as well, which is always an interesting discussion as to their expectations versus what you might think is a right level.
Right.
What about in South Africa, Suresh? I'm interested. Has it been a topic of conversation? Is materiality something?
No, it isn't. Just we've not seen it coming up. It, you know, materiality is always disclosed to the audit committee, but we've not seen it going further than that.
Yeah, I think certainly in my jurisdiction, I think the concern was that, you know, the audit committees are, it's hard enough to have a conversation with an audit committee who are absolutely highly skilled and understand the concept of materiality. If it was a conversation in inverted commas, it was open at to all shareholders at an AGM where you get a question on it, it's probably a different conversation, and it doesn't necessarily help that expectation gap issue. It's a very difficult conversation to have. Because they would expect it to be a much lower threshold, closer to what their investment size might be, for example. So that is a challenge. Anything else in the last couple of minutes that people wanted to cover off on the auditing standards, CAMS, going concern, any other enhancements?
I quite like the comment from one of the other groups on the use of, you know, I call it just technology, whether it's AI or analytics or, you know, whatever. I think there will be some expectation, you know, with regards to the description of audit procedures that use technology in a different or more sort of enhanced manner than in the past. So the question is, you know, whether there's room for being proactive in this way. I mean, I know there's many discussions about the scope of the audit, but it's of course beyond the remit of the IAASB. You know, it's a regulatory thing. So what should be the scope of the audit? But the question to me is rather, you know, if for example, the profession in a proactive manner wants to better describe, you know, of what they're doing and how they do it, I think this could be one thing, you know, that could be discovered, that could be discussed. And the question is then, if, you know, if this would be beneficial, for example, for the profession and also for the common understanding of what the role of the auditor is and how he does, you know, the audit, it could be a field for the IAASB as well, IAASB as well, you know, because the question really is, you know, how will audits be done in future? And I know that the discussion about scalability and so on, but I mean, it's the companies that expect auditors, you know, to use new technology, and you know, and it's also the audit committees, they expect the auditors to use technology. So what's the reaction, you know, from an IAASB perspective there? Because this is the future. Something must happen there.
Hopefully Tom's taking notes. I see, Eric, you had your hand up. We have 40 seconds left. Did you quickly?
From a broad strategic perspective, I think it would be, you know, wise to, you know, to set a tone there.
Yeah, which we have been trying to do as a board.
The role of the board and how important it is and how it contributes to public interest.
Yeah, no, it's on the agenda for sure. Eric, we have 20 seconds left.
Yeah, I just wanted to ask briefly about the other information paragraph in the auditor's report, and any feedback anybody had on that in their jurisdictions. So the 720, ISO 720 reporting.